Good morning, everybody. Happy Thursday morning. It's April 6th, 2023. I'm back home now after a long weekend in Houston, and I'm joining with you today. It's great to be with all of you. Just as a reminder, I put out the market blast this morning. Take a look at that. It's got some good information there. It's out on Twitter, and if you're on our mailing list, go ahead and check your mailbox, and it should be there. Also, tomorrow is a market holiday. Markets are closed in observance of Good Friday. Easter, of course, is this coming Sunday, and markets are closed, so we'll have a 3-day weekend, and we often see a good drop in volatility. Leading into a 3-day weekend, people sell volatility, and then they start buying it up as we come back out. So we could see, if we're down today in volatility, we'll probably get that marked back up on Monday or Tuesday of next week. Of course, next week starts a big week of earnings as well too. So a lot of stuff going on. Now, tomorrow is going to be an interesting day, of course. Non-farm payrolls come out before around 8:30. And I was going to say before the market opens, but of course the market's going to be closed. So we'll be watching that number. We did get some data earlier this week on the jobs situation. ADP number came in a little bit light. We saw tightening in the JOLTS job openings and labor report. And then today we saw an increase in jobless claims, jumped up about 30,000 in the jobless claims. So if that's a trend that's going to be starting, we're going to see some weakness coming into the jobs market over the next several months. I think that maybe tomorrow's number could be a little bit weaker than expected. I think they're looking for about 140,000 on the jobs number, jobs created. I think we're going to start seeing negative numbers on the jobs front coming up in by September and October. So this is the part of the equation that the Fed has been looking for. They won't be cutting interest rates until this jobs number is lower and unemployment is higher and wages starting to decline. Wage increases starting to decline. So we'll be watching all those numbers tomorrow. Of course, the stock market has been rather strong over the last few weeks. We did see a nice surge in the S&P 500 over and the NASDAQ since the middle of March. But as you can see this morning, futures are a little bit weak coming into today. NASDAQ has been pretty weak the last few days, and we're clinging to that 13,000 level. You can see here on the bottom left, the S&P 500 futures are down about 6 points. Dow down a little bit as well too, but the Dow was actually a little bit stronger earlier in the week and last week, and of course got weak from Wednesday to yesterday on the poor job openings number, excuse me, and the PMIs and the ISM data, which came out as well too. So volatility is up a little bit here, 59.59. It's up about 2.5%. NASDAQ, again, trying to cling to that 13,000 level. If it breaks that, we got some support down at 12,700 on the NASDAQ. So as far as the oscillators are concerned, you can see here we dipped down a little bit on the NASDAQ. We're down below zero, and the NICE oscillators at 82. We get down to about, I think we're 1,400 differential on the advanced decliners, which means if we have 1,400 more decliners than advancers, this 82 will go down to zero, and we'll see where we get there. But we were pretty well overbought last week, plus 262, and of course in the NASDAQ over 200 as well too. So pullbacks are not unexpected and not a surprise here when the markets are overbought. So I did want to look at a couple of charts with you as well. Let's take a look at the NASDAQ, the QQQ, right? Now this one has been the strong index so far in 2023, and you can see that from the lows here, 260. The index is up more than 20% from the lows put in October, and of course from the beginning of the year, close to 20% as well too. Higher highs, higher lows, but of course you get to this overbought reading like we had right here and we had right here. you're gonna pull back and you're gonna correct. And of course, 20-day moving average on the Qs comes in at about 307. That is about 1.5% higher than where we're at right now. So look for a bit of a pullback there. We do see the two, but interestingly enough, here's the 200-day moving average. It has started to turn upwards, which is good news. If you're bullish, the 100-day moving average is going to cross above that 200-day moving average here. We did get that golden cross down over here, and the 50-day moving average cross. But it does appear to me that we're a little bit frothy right here. Would not be surprised to see a much more substantial pullback to where? Maybe down to here. Okay, that would take you down to 296. That would probably be about an 8% correction pullback. Wouldn't be surprised to see that. And then another chart I wanted to show you here, the S&P 500, of course. Similar situation. We're starting to turn up on this 200-day moving average. Again, that's going to provide some good support as long as it continues to turn up. And then, but we do have a pretty overbought market, not as overbought as we were on the NASDAQ, of course, but still certainly a good overbought. And we do have some gaps to fill down here on the S&P 500. So maybe a pullback to about 3980 or so wouldn't be a surprise. You've got that, you'll fill up these gaps. 3980 comes in at around right there. And would fill a nice gap as well too. So volume trends have been fairly good. Volatility though has been somewhat nascent right now, and I think people are believing that the markets are not in trouble over here. We did hear from some Fed speakers earlier this week. Loretta Mester from Cleveland basically threw cold water on the concept of the idea that we're going to get rate cuts later on this year. So she said, no, we're going to move up towards 5%, which would be one more rate hike, which would be coming in May, and probably stay there for quite some time. But she did say at least 5%, at least 5%. So we do have some inflation numbers again coming out tomorrow with the wages. We'll have CPI and PPI coming out again in a couple of weeks. I think it's coming out. Look at my calendar here. Pardon my back. We do have CPI coming out in next Wednesday on the 12th, PPI on the 13th. So that's next week, just before earnings season starts. What are we looking for in the CPI? Well, let's take a look at what the Cleveland Fed is forecasting. Let's take a look at that. Coming up here right here. And again, we're going to look at the Fed funds futures as well too. FedWatch tool right here. The market is looking for, has bias to no rate hike or cut coming up in May, right? Cleveland Fed not coming up here just yet. Come on, let's go. Here we go. All right. So their models say that we're going to get a 0.3 on CPI. Core is at 0.45. So what does that mathematically equate to? 0.3 would be on the headline would be about 3.6%. On the core, 0.45 comes in at about 5.5%. Okay, roughly 5.5, 5.6. PCE down a little bit. But then look, we get a good bump up in the headline number in CPI, and that's coming in at what? 6% on the headline for April, for the month that we're in right now. That's the estimate for that. Core PCE at 0.38 basically stays the same. That's still too high. That's about 4.5, 4.6, coming in the same number as we did last time around. So listen, you know what? It's still too high for what the Fed is looking for. It's not 2%. So the Fed needs to overshoot on the Fed on the rate hikes in order to get this number down into the negative territory. So as we see, the market is looking at no rate hike, mostly leaning towards no rate hike in May, and in June, of course, basically the same situation. But then you go out to like December, and December is looking for probably about 3 rate cuts from where we're at right now. 3 rate cuts by December. So the only way I can see that happening as if the economy falls off a cliff. That's not happening. It's certainly slowing down right now, but we're not falling off a cliff. And then if inflation starts to really recede from where it's at right now. So and again, I just showed you the numbers with the estimate from the Cleveland Fed. It's not looking that way. So it's looking worse actually. So they will continue to raise interest rates until they feel comfortable that inflation is coming down. You don't need any other data or anybody else telling you anything else than that, other than that. Okay. All right. Let's take a look at a couple of charts again. So you may recall that on Monday's Daily Bites, we talked about this name here, United Health, and this was a huge winner for us. I talked about it on Monday. Again, it was right over here. I said it looked like we were going to shoot up pretty high. We did shoot up higher and bought some of these 500 calls, and those just exploded. We had more than 100% gain on those. So this is one of those things where what, if you're listening to the Daily Bites, you get a chance to get some ideas. Now, it doesn't happen every single time. I don't have an idea for you today, a trade idea today. However, one of these days, sometimes we get these things, and I did see on Twitter some people actually, hit some pay dirt on this trade from Monday into Tuesday or Wednesday, and of course yesterday had a monster day, and that's when I started selling some of my calls on Wednesday. So this is one of these things where if you're paying attention, if you're listening to the Daily Bites, you'll get some of these trade opportunities. And of course, how much should it cost you? Nothing, right? Just your time. So anyhow, that's that. And they do have earnings come out later on this month as well. So I think that's going to be it. Oh, I did want to show you one more chart. Stocks above. We always like to see this one here from time to time, and we made a move above the box. Remember, the box tells us whether stocks are in or out of a bull or bear market, right? So we did make that move above 50. We talked about that a couple of weeks ago. If we made a run up there, how far we go, and we're coming right back down to the 50 line, testing that 50 line to see where we're going to move to there. So it's kind of now we're seeing if this is just a modest correction or if it's going to be something more. If it's something more, we come back down in here. We may come down and test these lower levels in March, where we hit close to 3,800 on the S&P 500. So again, breadth is a good leading indicator to tell us where the markets are going to be going. All right. Let's see. I just tell you that take it slow, take it easy. Today is going to be one of those weird days where volatility is going to take hold, and we're down a little bit from these highs. Again, volatility is starting to pick up over here. Just get in the rhythm of what's happening in the markets. Look what happened yesterday, right? Not a whole lot of rhythm yesterday. We went down and we stayed down all day long, right? Here's the vol from yesterday. ADD started to climb back up. Volatility peaked at the beginning of the day and started heading down. And the put call ratio, which spiked on Wednesday, started to head down a little bit as well. So we've got to pay attention from one day to the next, how to proceed in this market. So I wish you guys a good trading day, and it's going to be tough sledding over the next couple of days. Have a great weekend. Happy Pesach to all of my Jewish friends in the tribe, and remember, this guy's still in charge. That's the bear, still in charge. Have a great weekend, everyone, and I'll see you on Monday.